All right. Let's share my screen so you can see my screen. Can you see my screen?
Yes.
Yes.
Yeah.
So I did some modification before, and I have those accounts. Those are T accounts, as you can see.
Mhm.
Now let's work on them and see what we're gonna get, what we can get. First one, obviously, that will be your raw material, right? No
Yes.
questions about it. That will be our raw materials. Second one will be
Direct labor. Direct.
more like a working process.
Okay.
That will be our working process account, correct?
Yes.
Yes.
All right. Next one will be,
Cost of goods sold.
think about it.
Finished
will be
goods
the
inventory.
Finished good.
Finished good.
finished goods.
Okay.
So we have so far, we have those three accounts. So this is our inventory, correct?
Yes.
Those are balance sheet accounts. This, let's make it fancy. Let's insert some shape here. Just a second, let me see what shape I'm looking. That's the shape that I'm looking. So what I'm gonna do is, is it gonna be like this? No, sorry. Let me play a little bit. This, and I want to. It doesn't work. This one doesn't work. I trying to get something, but it doesn't let me flip it. Let's see if there's any other options here. Let's try this one. No, it doesn't. Ah, here. Got it. So what we're gonna do, we're gonna get all those things and we're gonna call it our inventory. But I have to move this one up. My God, like this. This will be our inventory accounts, correct?
Yes.
Yes.
Sorry, it took me so long. And that will be our cost of goods sold.
Okay.
Cost of goods sold, that's an income statement. No
Okay.
questions about it.
Yes.
All those inventory, that means balance sheet. Let's merge those one. Here we go. Now, since those are inventory account, that you're gonna have beginning balance and the ending balance, right?
Yes.
Yes.
And ending balance. All right. So the question is, how are we gonna get this cost of goods sold? That's where the cost of goods sold is gonna come. So they're gonna come from finished goods, correct?
Yes.
Yes.
This cost of goods sold, they have to come from this finished goods account.
Mhm.
So we have to have it in the finished goods, cost of goods sold. In order to have it in the finished goods, what we have to do? We have to manufacture them,
Yes.
correct? So we have
Yeah.
to have cost of goods manufactured. So now question is, how much is this cost of goods manufactured? How are we going to calculate it? Well, we have to see from where that comes from. That comes from the working process, correct?
Yes.
Yes.
Right.
Yes.
Yes.
So if we get it from somehow we have to magically get it cost of good manufacturing from the working process. That will be cost of good manufacturing. It's gonna come from here. In order to have a product, what do we need?
We need
Direct
material.
material.
Raw
Raw
material.
materials.
Direct
Direct
labor.
labor. Direct
Labor.
labor.
Manufacturing overhead.
Manufacturing overhead.
Once I have those three, I can say I have product, correct?
Yes.
Yeah.
Now the question is, from where the direct material is going to come?
Raw material invented.
Raw
material.
material. Okay. Let's get it from there. It will be our direct material right here. Now the question is this the only material that we're going to use?
No, we have
No.
also
No.
indirect material.
Indirect.
So now we're going to have material.
Materials.
So we're going to have direct material and we're going to have indirect material.
Yeah.
Now the question is, in which account that indirect material is going to go?
Manufacturing overhead.
Manufacturing over.
Manufacturing overhead account. So let's use that indirect material. So from here, it's going to go right in here. This is how our direct material comes, correct?
Yes.
Right.
Now, next thing, labor.
Indirect labor.
We have to get that direct labor.
Mhm.
Direct labor first and then indirect labor second. From where are we going to get it? From the factory
Labor.
labor. Our factory labor will be the one who getting the labor. So we're going to get this indirect labor first.
And then indirect labor.
And then the indirect labor. That's correct.
Yes.
This will be my direct labor right here. That will be labor. We're going to have direct labor and we're going to have the indirect labor. Mark it is a red and this one, so it can be easily seen and I'll associate it with the labor. Many errors, you know, but at least you can see it. Same thing like you
So
saw
this is
on the
clear, but it is clear.
clear. Good.
Yes.
Yes.
So what's the other one? Anything else is going to come here.
Indirect.
I'm not going to specify rent and utilities and anything like that, but we already know what's here,
Okay.
right?
Right.
All those others, and we can say others that will be insurance, rent,
Mhm.
Furniture.
utilities,
Depreciation.
depreciation. Furniture is not going to be here. Furniture will be asset, but as a depreciation, then going to come here. Make
Oh,
sense?
okay.
Once we have depreciation, then we're going to transfer the cost of the furnitures and anything else, security,
Mm,
and many other things,
Yeah.
right?
okay.
Let's not specify, but let's call it other. So what we have to do, at some point we have to apply that manufacturing overhead. So manufacturing overhead is going to come from here, but that will be our applied. Right? And once we apply the manufacturing overhead, we have all those three components that we needed in order to have the product.
Okay.
That's the one, and let's get this one. This is our manufacturing overhead. Manufacturing overhead apply come from a manufacturing overhead account. So in this account, on one side, we're going to have actual cost, let's say, and the other side, we're going to have applied cost. Differentiate them like this. Now, the last thing left is from where we're going to get the materials. Well, they're going to come from the purchase, right? We have to purchase them. Once we purchase, we're going to have the materials. There's no magic here. They have to come from somewhere. And now we have the whole graph. Material purchase, material used as a direct material, as an indirect material. Factory labor, we hire people, they work as a direct labor, indirect labor, all the other things coming with the manufacturing overhead account, and then we apply. Don't forget here, that's your debit and that's your credit, correct?
Yes.
So all those accounts are going to have this debit, even this account is going to have debit, and this account is going to have debit, and this is our credits here. We have everything. Now the question is, how can I get this number? Because this is the number that I'm looking for.
Mm.
How am I going to get my cost of goods manufactured? What do we have to do?
We have to add all this manufacturing cost, direct material, direct labor,
Right.
and SMH.
And just
But before
Fine.
that, what we have to start? We can start with,
Beginning balance of work in
we're
process.
going to add the beginning balance of work in process, right?
yeah.
Yes.
Then we're going to get all those things. Direct material, direct labor, manufacturing overhead. Once I have those three,
I subtracted.
that not yet. Once I have those three plus the beginning balance, that will give me the total work in process cost. That's for the period.
Let's close on WIP will get us, right?
74,400.
For the period. And the last thing that I have to do is, so now I have the beginning, I have everything. What do we have to deduct?
Deduct
Finishing
the
WIP.
ending balance of work in process.
Okay, less ending balance in the work in process. And that should give me my cost of goods manufactured, right?
Yeah.
Yes.
Yeah.
39,000.
Let's see if this works. Let's see if this works. Let's go with a small amount. 20 here, 50 here, 60 here, another 60 here, and the ending balance, let's leave it 10. Where we are now. We're going to add the beginning balance. That will be equal to this amount. Then we're going to add the direct material, direct labor, manufacturing overhead. All those three.
190.
Once we add all together, it's going to give us 190. What do we have to do? We have to deduct the ending balance. So our formula will be this one
180.
minus that one. 180 is our cost of goods manufactured.
Okay.
At this point, can I calculate my cost of goods sold?
Mm.
Yes.
Yes.
What do I need to
Yes,
know?
yes,
I
yes.
need my beginning balance.
Yeah.
Let's put 50 beginning balance. We already know cost of goods manufactured is equal to 180. Ending balance, let's leave it only 20 because we don't want to keep our inventory. So what do we have to do? I have to start with
50. Add the beginning balance.
beginning balance and the finished goods, which will be 50. Then what we're going to have? Cost of goods manufactured. Right?
Manufactured. Yes, you
Yes.
just have to add
We're
it.
going to get it from here.
110.
Once we add beginning balance, cost of goods manufactured, what that's going to give us? Cost
Cost
of
of
finished
finished goods
Goods.
available for what?
for
For sale. For
Sale,
sale.
of course.
Yeah.
I don't need them, right? I
Mhm.
don't need those finished goods, sorry. I may produce them, I may like them, but I don't need them. So I need to sell them. And that's what we're gonna do. Less
The ending balance.
The
ending balance of
balance.
the finished goods,
Channel.
ending balance of the finished goods, and that should give us cost of goods manufactured. So let me do some modification here. Let's get rid of these borders. Ending balance of the finished goods. Once I have those one, it's gonna give me cost of goods sold.
Mhm.
Now I can want to highlight that cost of goods sold to be fancy. No, this one. I want to use, what do I want to use? This one. Now I can calculate my cost of goods sold. Just a little modification here. Cost those two, it's gonna give me the total of the cost of goods available for sale minus the
20.
ending, which is 20. It's gonna give me
210.
230 minus 20. That will be 210, and 210 will be my
Cost.
cost of goods
Cost
sold.
of goods sold.
Right.
That's how you calculate cost of goods manufactured, and that's how you're going to calculate cost of goods sold.
Perfect.
Make sense?
Yes, sir.
Yes.
So now at the end of the period, once we get all this calculation, at the end of the period, what do we have to do?
We have to make a price.
go and check what's going on here,
Mhm.
right? This is our thing now. We have to check what's happening here. And what we said, we have two options. Either this one will be 30,000 and next one will be 40,000. That will be option one.
Mhm.
Option two will be opposite. So if that's the option, if that's what's happening, is we applied more than with actual cost, correct?
Yes.
So
Yes.
technically we over apply.
Yes.
Oh,
It's now overestimate.
It's not, yes, we over applied. Clearly we over applied.
Mhm.
Why we over applied? Now let's not go there. That's too many questions. Is it because the overhead rate is too high? Is either because the actual usage of the allocation base is too much? One of those. But let's not go there. Let's go with the over applied. So how much is the over applied? 10,000.
10,000.
What do I have to do? I have to bring this account to zero.
Oh,
How can I do this?
I
Now
should
I
put
have,
here 10,000.
right, I have to put 10,000 right here. Once I put 10,000 here, where should I? So now I'm putting on the debit side. Now I have to put it somewhere on the. Where can I put it? I have two options. One option is I can go directly to my cost of goods sold and directly apply those 10,000 to my cost of goods sold. Because at the end of the day, everything is going to come here. Make sense?
Yes. Yeah.
This is loss, professor, or this is gain? Like 10,000, I at the end it was like credited for me, or it is like something.
When I credit, so watch this. At this point, my revenue. Let's say my revenue is 50,000, and my cost of goods sold is what we come up 210,000.
200.
Those are the numbers that I have at this point, right? Those two is going to give me what? Gross margin.
Yes.
Where is my gross margin at this point? This one minus that one. No, I'm going to increase the revenue to 500,000. 500, 1, 2, 3. 500,000. So where's my gross margin? 290. But I have to make correction here with the 10,000. Make sense?
Yeah.
So what I'm going to do, I'm going to reduce my cost of goods sold. And what's going to happen with my gross margin?
10,000. It will come down by 10,000.
Exactly. So if I plug those 10,000 if they move it from there, if I move it here, then I have to apply them
To the to the to the
to
cost.
the cost of goods sold. That's where they have to go,
Right. So
right?
that minus that.
So that will be equal to original one minus the 10,000. So where am I now? My gross margin going up. Can you see?
Yes.
So it is added then. Credited means added. Or
Credit
no,
mean deducting, mean
Deduct.
reducing the cost of goods sold, increasing the gross
Deduct.
margin.
Margin.
Make sense?
cost.
If I adding, because I'm deducting cost. If I deduct the cost, I'm increasing the result. I have plus minus something equal to something. If I'm
But
increasing the amount that I'm minusing, I'm reducing the result. But if I'm reducing the amount that minusing, I'm increasing the result. Make
Yes.
sense?
Yes.
Yeah.
Those
But-
those working in the opposite direction.
okay. Yes,
Make sense?
Professor.
Yes.
Professor, if we are preparing an income statement, then it should be, although we are deducting it from that amount, we have to put it on a credit side, right? The 10,000.
That's correct. Yes. If we're preparing the income statement, we're going to put that thing on the credit side. I'm trying to make it here to see the relationship. Cost of goods sold goes up, gross margin goes down.
So this means, Professor, that I will add more price on my cost of goods sold, or I will decrease the price.
Sorry?
So does this mean like I
No,
will
in this mean I'm reducing my cost of goods sold. In this case, what's happened in this case, what's happened? I'm creating cost of goods sold. When I create cost of goods sold, my cost of goods sold from here going down,
Yes.
right? Let's put this one in red. My original, the way I'm estimating it before this adjustment is I'm seeing 210, but they're not 210, they're only 200. So when I make the adjustment, actually I'm making 10,000 more. Make sense?
Yes.
Now that brings her to the second scenario. So for the second scenario, what I'm gonna do, I'm just gonna copy this sheet. And this is, let's call it here, over applied. No, sorry, not here. I want it here, over applied. And the next one will be under applied, obviously. What's going to happen with the under applied? Opposite. What will be the opposite? Now, instead of 30 here, here will be 50.
Yes.
So in that case, where will be our balance? Our balance will be on the debit side.
Yeah.
10,000 will be on the debit side. So what do we have to do now?
We will
We
put
have
them at the debit.
We
In
have
the
to put it on the
debit.
credit side.
Yeah.
So now we have to plug here on the credit side, 10,000 on the credit side. Let's put it back again with the red. So I can drag your attention. And in that 10 now it's going to come right
To
here,
debit.
Debit.
right? On the debit side, I have to plug those 10,000. Once I plug those 10,000 here, this one, I don't need it anymore. That's going to affect me pretty much the same. Again, the cost of goods sold, correct?
Yeah.
But what's going to happen now with my cost of goods sold?
You'll have
I
to
will
add.
increase.
It's going to
You'll have to
increase,
add
right?
this amount.
That
Yeah.
will be this one
220.
plus
500,000.
the 10,000, right?
220.
Now my cost of goods gross margin going down,
Yes, margin is reduced by 10,000.
right? Why? Because I increase my cost of goods sold.
Right.
Make sense?
Mhm.
Those are the two
Yes.
scenarios basically. Now, the question is, seems like a logical way to go to the cost of goods sold and reduce the cost of goods sold. This is the logical way, because at the end of the day, with all the flow information, everything's going to be sold, correct?
Yes.
The question is there a better way, more accurate way than just going to the cost of goods sold? Obviously, answer is yes. What will be that? We to see, is it possible from this manufacturing overhead we apply, is it possible we to still have something in the working process?
What is
Yeah.
the question again, Professor?
So from the manufacturing overhead that we applying to our products, is it possible some of the products that hasn't been completed yet?
Yes. Yes.
Yes. Is it
Yes.
possible for some of the products hasn't been sold yet?
Yes, sure.
Yes.
Yes. Is it possible most of them to be sold? Probably they're most of them sold. But now, once we're talking about the $10,000 difference, how can we apply those $10,000 if we have something still sitting in the working process, something still sitting in the finished goods, and most of it cost of goods sold? Which
Estimate.
method? Estimate. So what I'm going to do, I'm going to chase how much I have in work in process. Let's say in work in process, I have 10,000.
Mhm.
Or let's go with 20,000.
Mm.
Then I'm going to check how much I have in the finished goods. In the finished goods, let's say I have 40,000. And then let's see how much I have in the cost of goods sold. In the cost of goods sold, let's say I have 140,000. Can I get the total?
Yes.
Yes, I can get the total. How much will be my total?
200,000.
200.
200, right? Why? Because I make it a round number. I purposely was chasing 200, you know? So what can I say now? My total is my total, right?
Yes.
That's my
Yeah.
total. But my total is also 100%,
Yes.
right? So
Mhm.
now, can I get, what's the percentage out of my total sitting in work in process?
20 over 100, over 200,000.
Yes, so it's going to be this divided by this.
100.
So 10%. What's the percentage of the finished goods in relation to the total?
40.
20%, 20%,
20%. What's the percentage of the cost of goods
70%,
divided by? Obviously, that will be
100%.
100% minus 10 minus 20, right? 70%.
Yes.
So do I have 100%? I have the 100%. Now the question is, how much I have to allocate?
10,000.
10,000.
Yeah.
I have to allocate 10,000. So once I finish my allocation, here I have to have 10,000, correct?
Yeah.
Right. Okay.
Now, what do I know? I know that this percentage is not going to change, correct? And I'm going to
applying on the same
everything.
basis,
Allocation.
on the same basis
1,000,
allocation.
2,000, and
Exactly.
Right.
7,000.
I'm going to apply everything
7.
based on these percentages.
Yes.
So what I'm going to do? 10% time 10,000 is going to give me 1,000 going to go to the
1,000,
working process.
2,000, and 7,000.
2,000.
Then that percentage times the 10,000 is going to go to the finished goods. And the last one will be obviously 7,000.
7,000.
And that's how I'm going to apply this $10,000
Mm.
to all those three accounts. Make sense?
Yes, sir.
Yes.
What method I'm going to use? I'm going to use the proportionate method. This
Proportion.
one is called proportionate. Why? Because I have a proportion.
Proportion. Okay.
What's proportion? Percentage,
Mm.
Exactly.
right? Nothing more, nothing less. Percentage.
Right.
So this is
Okay.
professor in case there are some products in work in process not completed, and there are some in finished goods and some not sold in cost of goods sold. But
Right.
in case only we have all of things like are completed and just we are dealing with the cost of goods, we will do this one, the revenue, cost of goods, and everything. So the allocation in case they are, if we want to allocate it for the 3 of accounts.
That's correct.
Mm.
Exactly. Make sense?
Yes.
Yes.
Excellent.